I'm going to tell you about the worst trade of my life. Not because I lost money, though I did $47,000 in a single week, but because I made every decision perfectly. Every entry was textbook. Every analysis was flawless. My risk management, impeccable on paper. And yet I still blew up a third of my trading account in 5 days. If you think trading is about finding the right strategy, this story will shake you. Because the strategy wasn't the problem. My discipline wasn't the problem. The problem was something far more dangerous. Something lurking in every trade you take, waiting for the perfect moment to destroy you. Stay with me. By the end of this video, you'll understand why 95% of traders fail, and more importantly, what the 5% who survive know that you don't. The setup. It was October 2019. I'd been trading professionally for 6 years. My account had grown from $15,000 to just over $200,000. I had a system that worked, a win rate hovering around 43%, but a risk to reward ratio of 1 to 2.5 that made the math beautiful. I'd survived the learning curve that kills most traders. I'd developed emotional control. I tracked every trade in obsessive detail. I knew my expectancy formula by heart: win percentage times average win, minus loss percentage times average loss. My edge was real, proven over 18 months of consistent profitability. Then came the Year USD setup. Everything aligned. The daily chart showed a perfect ascending triangle. Price had tested resistance 4 times, coiling tighter with each touch. Volume was increasing. The fundamentals supported a breakout. ECB was about to announce policy changes, and the whispers in the market pointed to dovish surprises. I waited for confirmation. When price broke resistance with a strong bullish candle, I entered. Stop loss 2% below the breakout. Target at the measured move, giving me a 1 to 3 risk-reward ratio. The trade immediately went my way. Within 6 hours, I was up 4%. Everything was working. Here's where the story gets interesting. The turn. The next morning, I woke up to my phone buzzing. The ECB announcement had come early, leaked to the press before the official statement. The euro spiked violently, hit my target, and I was out with a beautiful 3-to-1 winner. Dopamine flooded my system. This was the high every trader lives for. So I did what any disciplined trader would do. I reviewed the setup, documented what worked, and started scanning for the next trade. And I found it. Same pattern, different pair. GBP, JPY, another ascending triangle, another breakout setup, another 2% risk. I entered, it worked again. Another 3-to-1 winner. By day 3, I'd hit 5 winning trades in a row. 5. My account had grown by 22% in 3 days. Now, let me ask you something. What would you do in this situation? If you're honest, you already know. Because what happened next wasn't stupid. It was inevitable. The illusion. I'd found the pattern, the edge, the breakthrough that every trader dreams about. Ascending triangles on the 4-hour chart, with momentum confirmation. It was working with surgical precision. Trade 6, another ascending triangle on USD CAD. But this time, instead of my usual 2% risk, I went to 3. After all, my confidence was justified. 5 wins in a row proved the pattern worked. And my account had cushion now. I could afford slightly more aggressive positioning. The trade moved against me immediately, but I'd been here before. Good setups often retest before moving. I held. The stop was still safe. Except price kept falling. It hit my stop, and I took the 3% loss. No problem, I told myself. Losing trades are part of the game. My win rate was 43%, which meant I should expect losses. This was just probability playing out. Trade 7, another triangle. This time I convinced myself I'd missed a subtle detail in trade 6. The volume hadn't been quite as strong, but this new setup? Textbook. I went back to 2% risk. Then, in a decision I still remember in vivid detail, I thought, why not add another position if it breaks out further? That's how professionals scale into winners. The trade triggered. Then the second position triggered. Effectively, I was now risking 4%. It reversed. Both stops hit 8% total loss. The spiral. Now I was down 5% from my peak 3 days earlier. My winning streak had ended with 2 losses, and suddenly, that 22% gain felt like it was slipping away. This is the moment that separates professional traders from gamblers in disguise. I knew intellectually that I should step back, take a break, review my process. My journal had clear rules. After 2 consecutive losses, pause for 24 hours and analyze. But there was another voice, quieter but more persuasive. You know this pattern works. You've proven it. 5 wins in a row don't lie. You just got unlucky twice. The math is still in your favor. That voice wasn't wrong. The math was in my favor. The pattern did work. But I'd missed something crucial. Something that, in hindsight, seems obvious, but in the moment, was completely invisible. I wasn't trading the pattern anymore. I was trading my ego. The crash. Trade 9 was on AUD/USD, another ascending triangle. But this time my analysis had changed in subtle ways. I was now looking for the pattern, forcing the chart to fit my narrative instead of objectively evaluating what price was telling me. The triangle was there, but the breakout candle was weak. Lower volume than ideal. The resistance had only been tested 3 times, not 4. Small details, but important ones. I entered anyway. 5% risk because I needed to recover. The trade lasted 4 hours before stopping me out. Now I was down 10% from my peak. But worse than the monetary loss was the psychological damage. My confidence, that unshakable certainty I'd built over 6 years, was crumbling. I'd lost 3 trades in a row. My carefully constructed identity as a disciplined, systematic trader was under assault. And the market, with its infinite patience, was about to teach me the most expensive lesson of my career. The breaking point. Trades 10, 11, and 12 happened over the next 36 hours. Each one was an ascending triangle. Each one had my risk climbing, 5%, 6%, 7. I was no longer following my system. I was chasing redemption. The final trade, number 12, was on EUR/GBP. I put 15% of my account into a single position, convinced this was the one that would recover everything. The pattern was perfect. It had to work. It didn't. When the dust settled, I'd lost $47,000, not over months, over 1 week. And here's the part that haunted me. Every single trade had been a legitimate setup. The patterns were real. The strategy was sound. So what went wrong? The revelation. I spent the next 2 weeks away from the markets, not because I was scared, but because I needed to understand. I printed out every trade from that week and laid them across my office floor. 12 trades. 12 sheets of paper documenting every decision. And there it was, hidden in plain sight. The strategy hadn't changed. The patterns hadn't changed. What changed was me. After the 5th winning trade, I'd crossed an invisible line. I stopped executing my system and started executing my emotions. Fear of missing out, pride in my winning streak, desperation to recover losses. Each emotion had hijacked my decision-making in ways so subtle that I'd convinced myself I was still being rational. This is what trading psychology really means. It's not about controlling your emotions during losses. Every trader knows they need discipline when they're losing. The real test is controlling your emotions when you're winning. Because winning creates the most dangerous illusion in trading. The belief that you've figured it out, that you're special, that the rules that apply to everyone else don't apply to you anymore. The truth about the 95%. Let me tell you why 95% of traders fail, and why it has nothing to do with strategy. They fail because they confuse a winning streak with a working system. They fail because they let emotions masquerade as intuition. They fail because they believe that trading success is about being right, when it's actually about being consistent. I've met traders with 70% win rates who blew up their accounts. I've met traders with 35% win rates who became millionaires. The difference wasn't their accuracy. It was their understanding of a single principle. Your edge is not your strategy. Your edge is your ability to execute that strategy without interference from your psychology. The ascending triangle pattern I was trading, it still works. I still use it today. My expectancy hasn't changed. But what has changed is my awareness of the internal battle that happens with every trade. Now, when I'm on a winning streak, I reduce my risk instead of increasing it. Not because I've lost confidence in my system, but because I've gained awareness of my psychology. I know that winning activates the same reward centers in my brain as gambling, and those chemicals don't care about my trading plan. When I lose 3 trades in a row, I don't pause because I've lost faith in my system. I pause because I know my brain is now desperate to recover, and desperation is the opposite of discipline. The 5% secret. The traders who survive, the 5%, aren't smarter. They're not luckier. They don't have better strategies. They have better systems for managing themselves. Let me share what changed for me after that $47,000 lesson. First, I built rules for my psychology, not just my trades. My trading plan now includes maximum trades per week, 15. Mandatory breaks after 3 consecutive wins or losses, 24 hours. And maximum position size caps that decrease when I'm in a hot streak, not increase. These rules feel counterintuitive. Why step back when you're winning? Because your hottest streak is when you're most vulnerable to overconfidence. Second, I separated my identity from my results. I used to measure myself by my monthly returns. Now I measure myself by one metric. Did I follow my rules? A losing month where I executed perfectly is a success. A winning month where I broke my rules is a failure. This shift sounds simple, but it's revolutionary. Because once your self-worth is detached from outcomes, you can finally execute with clarity. Third, I accepted that I will never master trading psychology. It's not something you conquer once and move on from. It's a practice, like meditation or physical fitness. Some days are easier than others. Some weeks test you more than others. But the awareness that you're always vulnerable to emotional hijacking is itself the protection. The expectancy equation redux. Remember the expectancy formula? Win percentage times average win minus loss percentage times average loss. Most traders focus on the first part, increasing their win rate, finding better entries, refining their strategy. But the formula is incomplete without one critical addition. Expectancy only works if you can actually execute the trades. You can have the most profitable system in the world, but if your psychology causes you to skip trades after losses, increase size after wins, exit winners too early out of fear, hold losers too long out of hope, then your real-world expectancy is 0, or worse, negative. This is why backtesting, while valuable, can be misleading. Your backtest assumes perfect execution, but humans aren't capable of perfect execution, especially under emotional pressure. That final multiplier is everything. A system with 1.5 expected value per trade executed at 50% consistency performs worse than a system with 1.0 expected value executed at 90% consistency. Your path forward. If you're still watching, you're different from most traders. You're willing to hear uncomfortable truths instead of chasing comfortable fantasies. So here's what I want you to do. Pull up your last 20 trades. Not your winners, not your good trades, all of them. And answer these questions honestly. How many trades did you take that perfectly matched your system rules? How many trades were influenced by wanting to recover a loss? How many trades were sized differently than your plan because you were on a winning streak? How many trades did you exit early because you were afraid of losing a profit? If even 3 of your last 20 trades were compromised by psychology, you don't have a strategy problem. You have an execution problem. And here's the beautiful part. Execution problems are fixable. You don't need a new strategy. You don't need a new indicator. You don't need a guru's course. You need awareness, rules for managing your psychology, and the humility to admit that you're human. That $47,000 loss in 2019, it was the best investment I ever made. Not because I enjoyed losing the money, but because it shattered my illusion of control. It forced me to see that trading success isn't about outsmarting the market. It's about managing the chaos inside of your own mind. Today, my account is worth more than it was before that week. But more importantly, I trade with a peace I never had in those 6 years of success before the crash. I no longer fear losses because I understand they're just probability playing out. I no longer chase wins because I understand they're just probability playing out too. And when I'm trading well, when everything is clicking and the account is growing, I remember that warm October morning when I was absolutely certain I'd figured it out. Because certainty, more than fear, more than greed, is the most dangerous emotion in trading. The market will always be here. The opportunities will always come. Your job isn't to catch every move or capitalize on every streak. Your job is to still be here tomorrow, next week, next year. That's what the 5% understand. That's what makes them survivors. Conclusion. So I'll leave you with this question. What would you do right now if you knew your next trade would lose? Would you skip it? Reduce your size? Get nervous? If so, you're not trading a system. You're trading your emotions. But if you can enter that trade with the same calm, the same position size, the same discipline as you would a trade you knew would win, then you're starting to think like a professional. The market doesn't reward the smartest traders. It rewards the most consistent ones. If this resonated with you, if you recognize yourself in this story, drop a comment below with one change you're going to make to your trading psychology this week. Not your strategy, your psychology. And if you want more content like this, real trading psychology from someone who's lived through the mistakes, subscribe and hit the notification bell. I'll see you in the next one. Trade safe, trade smart, and remember, you're not trading the market, you're trading yourself.